Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Got your sweat on, had a great brekkie with a tea, coffee, or juice, as I saw from your previous comments in that last video, and spent some time with loved ones. Today, let's look at these markets as they creep into danger zones. But of course, I'm going to lay on the hopium here. I'm getting very, very excited at these lower levels. I've not been excited during those dips from January on the way down. You guys that have been here, subscribed with the bell notification icon, know exactly what has been happening over the last 9 months in the market here on the channel. Make sure you like up the video as well. So today we're back in familiar settings here in Australia with the old Bitcoin number plate right there, and everything else in the background here is slightly different as I've moved the desk. Don't worry, things are going to look a little bit different for the next couple of days. But today, the danger zones, things are happening as we have anticipated to a higher probability. We don't have a crystal ball, but things are moving within that direction. And that's what I want to look at in today's video as I get even more excited at these lower prices for S&P, for Bitcoin, ETH, and of course, cryptocurrencies as well. So quick shout out to the channel sponsors, ByBit, 0% on all spot trading pairs, and they also have 0% on maker fees as well. This is the little shill piece at the beginning of the video because a lot of people are looking to DCA into Bitcoin at this point in time. And if you got 0% on your fees, of course, you can save a little more there as well. So check out the link in the top of the video description, also up to $4,500 of sign up bonuses. Same deal with Swyftx for the Aussie guys. If you want to earn some interest on that ETH or Bitcoin or stable coins that you have lying around, 4% all the way up to 6.7% as well. So the thing I've talked about in previous videos is looking for exchanges that you believe are going to survive the bear market if you wish to earn some crypto on them and to start buying and selling on those crypto exchanges. Of course, we've seen a lot of apps go down like your Celsiuses and Voyagers. Those sort of apps just did not have the stay power, and they were using your money to go and trade in other avenues and extremely high risky DeFi plays. So make sure you have exchanges that you are comfortable in using and that you don't keep everything on these exchanges. These are just some of the risk management strategies you can use for your own portfolios. All right, let's move on to the S&P, the Nasdaq, Bitcoin, ETH, and cryptocurrencies for an update as we start to see a lot of these breakdown areas and reaching these final capitulation zones that we've been talking about for quite some days. Fear and greed is one thing I want to bring up yet again, just as a reminder as we do our daily analysis here and then marry that over the top of our macro views as well. Note that the fear and greed is still sitting around 20 to 23 on the index here. Over the course of the last 3 to 4 months, we've seen the index go from extremes of 6 all the way up to 46 and now sitting somewhere in the middle. Note that the prices are basically where they are now, 18K, are basically where they were in June when we got to those extreme lows on the 18th, 17, 18, 19th of June. But we're having less fear than we did back then. So we're seeing a divergence in the emotional setting of the market in terms of price and obviously the market sentiment. Emotion was way more fearful 3 months ago than what it is today. Prices remain relatively the same. So people are getting accustomed to these levels. And like we've been searching for, I believe we are trending around the bottoms right now. So if I'm dollar cost averaging, which I'll show you on the chart in terms of our cycle buy zones, that is a signal that I definitely want to see happen in these markets. I want to see people being more comfortable and not getting scared as they once were, especially when we see these news announcements come out like the FOMC. You know, we'll have a look at that on the chart, just how little of an impact it has actually made compared to the rest of the price action. So S&P, this is what we've been watching for the last couple of weeks in terms of the support resistance flip. And then, like I had written, the almost inevitable retest, which we're basically coming back to now. Remember, we had this here just a few days ago before the market broke down. We saw a pump, a break of, or a test of 50% at 4,100 points. The rejection on the 12th, market came back down, used that support, flipped it to resistance. You see a small daily double top here, and the market is now trending down towards the retest zone of about 3,700 points. We want to buy low, sell high. But how do you do it and keep your nerve about you and not get swept up into the FUD? Just like what happens at the other end of the spectrum with the fear, with the FOMO at the tops, when people just start buying at tops because they feel more comfortable. Now it's the opposite. Now things are starting to get scary. Notice the title changes on YouTube and Twitter and people talking about depressions that's coming in 2023. Things are going to get worse. Forget that noise. This is what I'm doing. I'm forgetting all that ridiculous noise. I need to buy low and sell high. It's pretty damn simple. And the only way to do that is to see what's going on there when it comes to the market sentiment. Say, thank you very much. I see all you guys are scared shitless. I'm going to get in to buy. And then I look for price zones. So I'm marrying in market sentiment, timing, and price. That gives me far more comfort in my purchases to then wait out the fear and watch the market reverse. So we're coming back down to 3,700. 3,600 is the current low in June. And like we have been watching for months now, this is our 50% level for macro support at around 3,500 points. So I'm not in any stage of fear unless we break down from 35 and then the previous support zones of about 32. That would be my extreme level for some sort of wicks or close, just a few days of close within that zone of 32 to 3,500 points before we can bounce back. We're not there yet. We're at 37, 3,800 points. It's quite a long way down. And even 3,500 is still bullish in a macro play. It's just a correction in a macro view. Look at the lows from March 2020 to the top in December, January 2021, 2022. Now you have a correction. It's just on a bigger term time frame. But the reason why people get very fearful of this is because they don't have history. They don't look at the history and start to do their own analysis on it and keep a watch of what has happened in the past. They basically trade or invest day to day, especially retail, because they just watch the news. All right, so this is still all within action here. Nothing out of the ordinary. We saw the market trend down. We haven't even come back to the previous higher swing bottoms or the previous low of June. So these moves down, as I said in the intro, they're getting a lot smaller than what all that fear was at the beginning of the move. These beginning moves were a lot bigger, and the same thing happened in the Nasdaq. So what will capitulation sound and feel like? It's exactly what I just mentioned before. We're going to see a lot of fear. We'll see a lot of the news headlines tell us about depressions, and we should look out for these things in 2023. Of course, have some cash on the sidelines for lower prices. But if you're looking to dollar cost average and have a 3 to 5 year play, for me, I've figured out my analysis. The pricing is within a zone that I'm comfortable with the risk and reward. The market is heading in that direction. Time to start dollar cost averaging in to the markets of my choosing. 10,600 on the Nasdaq would be one of my lower levels that I'd be comfortable with. And then the last level is the danger level here at around 8,900 points. So anything above those levels, market is basically in a correction for me, and I'm not concerned for the longer term play. We've had a move up. We need a correction. People got extremely overheated in tech. Therefore, we need to have some massive profit taking and restart the cycle again. Bitcoin on the 4-hourly FOMC meeting happened. Obviously, there was the volatility. The move was 9% within the FOMC meeting. It was a few hours around that point. Let's go to the daily for Bitcoin. The bear market trend is still intact. We have not broken that yet. As for the short-lived breakouts, they could bounce off any of these support zones, break above for a couple of days, then back under. But I don't think this period underneath the bear market trend will last too long if we see a breakout or a fake out to the upside and then closes back underneath. So I'm going to be prepared again with more dollar cost averaging in on Bitcoin only at this stage, as I still see Ethereum falling further. It's something I've been very, very vocal about for months now with ETH. And even though people are getting hyped up about the merge, which is now over, and I continue to bring it up, it's really important to remember where that market sentiment has been and now flip it to the downside when we start to see a lot of those breakdowns. We're in that danger zone for ETH at the moment, but just quickly on Bitcoin, this is some of the lowest closes that we have seen now. So yesterday's close was 18,461. Just 15 days earlier, we were at 18,790. And if we go all the way back to June on the selling climax was at 18,970. That was 95 days ago. So we now have the lowest close since the 11th of December 2020. So anywhere around that point, that's basically now the lowest close that we are currently in. Let's have a look at how many days that actually is. It's absolutely phenomenal where we currently sit. 649 days, lowest close. So keep that in mind as we continue just to slowly track down, and then eventually we might see one of those final capitulation bars. That's what we're on the lookout for even better prices. So get hyped up, get your plans ready, get your exchanges organized, money transfer. Don't leave it to the last minute and think it'll be fine, it'll be fine. This could happen any day now. Probably I'm saying let's throw out there 2 to 4 weeks, somewhere within that period, so get ready. Now, ETH is in that danger zone that we have covered here. Danger if a break of $1,300. Really, we're looking at the tops here at about $1,280. We have closed underneath that. Yesterday's close came in at $1,245. So the crash was stopped on the 19th, had a little bit of a pause. We had the volatility on the FOMC meeting. The trend was already down. That's why I put so much emphasis on not worrying about the noise of the news. The trend is down. There is weakness in the chart. There is weakness in the swing chart trend as well. So you got your swing chart here. You can see the swings are all down. Therefore, it shouldn't come as a major shock that the FOMC meeting didn't reverse the market and basically prices continue to fall because the trend was already down. Remember the old saying, the trend is your friend. And the trend has proved again that we are now down. The other thing here is that we're now cheaper than the pre-merge hype. So log this in your memories, put it in your trading journals when you're looking at FOMO and FUD itself. The FOMO, try not to get caught into it. It will 99% of the time wreck people. They just get caught up in the hype. Merge hasn't been priced into the market. If you ever see one of those titles, give them the middle finger and say, I'm not going to fall for that crap. I've seen it before. Yes, maybe in the long term it hasn't been priced in, but in the short term, you're hyping the shit out of this and I'm going to get wrecked. So put some emojis, give them the middle finger or a little smile and say, sure thing. Hold your money, keep it safe, and then wait for those better opportunities to get into the market, especially in a bear market. Now, in a bull market, things are a little bit more crazy. In a bear market, you can pretty much be sure that all of these hypes are basically sell the rip opportunities. So now we're back under. What does this mean? Well, between 1,000 and 1,300, provided we get another couple of days under here, I'd say this is going to be basically the grinding, churning area. And of course, for me, it's not a buy opportunity yet. So if I need to take action on this information, then I'm not looking at this as a buy opportunity yet. I think it'll grind out in this zone and potentially come back and test the $1,000 area, which would then, I think, potentially give way and drop into the 3 figures again. This is a long way off. Yes, I can be wrong, and I will change my analysis if I see bullish signals come back into the market. But for now, it's looking weaker to me. You can see volume increasing, lower close, where I didn't see that bump up like we saw for Bitcoin, which then again failed. And the market is just not showing that strength yet. All right. So the analysis changes depending on what information we are given from the chart, which essentially is what the smart money is doing. So for now, things are still down. This zone is churny, grindy, not a buy opportunity for me yet. I'm going to wait it out. And for the ETH BTC chart, it's still trending down as well. Where I don't have any other signals here to say that we're about to bounce from this point. I think we're just off the 50% level as well, just started to break through that. So it's basically been a distribution of ETH into BTC again, because now we're seeing the ETH BTC drop, meaning people are valuing Bitcoin more than they're valuing their Ethereum, and they're selling the Ethereum into Bitcoin. That's essentially what this chart is here, ETH BTC. So hopefully that cleared it up for you guys who are interested in trading ETH BTC charts. Now, the next support level here, 5.9%, call it 6%, and then to the downside, about 5% again. 5% came in at, this is 5% ETH BTC value, that came in at our 50% bull market range of ETH BTC. So that's going to be some more major support down here. Let's see how it reacts to those levels of 5% and 6%. While I'm here, I'm on MEXC Global. This is open to all users around the world. Yes, even those other countries that all speak English. And if you're interested, they got 0% maker fees at this point in time as well. So check them out, top of the video description. The total cryptocurrency market cap made up of all cryptocurrencies out there, including stablecoins, is hanging on by a thread here at 860 billion. levels below 800 to 820, final support there at around 760 before we give way and drop into those zones that I've been waiting for quite some time before I would be very confident in dollar cost averaging into any other altcoins. Now, for the total 3 chart, this is all cryptos excluding BTC and ETH. Now, I've also got a little trick here from an indicator that we've created, TIA Crypto Total Market Cap. Let's unlock that, and this gives us the purple line here. It's basically the same sort of trend, but it's without stablecoins. So all altcoins, not including stablecoins, not including Bitcoin, ETH, of course. So the little purple here is at around 207 billion. We're getting awfully close. Now, if we were to break down from these levels, it'll drop into that zone that I've been waiting for that final capitulation on alts. We're still a little way off that 340, 360, so 20 billion if it can hold itself. Otherwise, I'd say we will drop those things and then head a little lower. Now, this is the lowest close we've seen in 71 days. So yesterday's close, that's the lowest since back in July. So we're getting towards the lows. We got to see how it reacts to this level at 340, because you can see the market has bounced twice off that. Maybe we'll get this third time and a move up. Should that happen, the strength that I'll be looking for from the bounce would be a break above 400. So I think it really needs to get above 400 to take out these tops to show some strength in the altcoins compared to BTC and ETH. So keep a lookout for that if you're looking for cryptos that move above. Otherwise, breakdown, things are looking very weak, and we will get that capitulation to lower prices. I got massive content coming up for you guys on this channel, so make sure you are subscribed with the bell notification turned on and all. Like the video up so you can see this in your news feeds. These are from some of the most well-respected analysts on crypto Twitter, and one of my favorite of all time, Phil Anderson. The guy is an absolute genius, has been spot on for over a decade that I've been watching, and 3 decades since he has been putting out his information publicly as well. So make sure you are subscribed. I'll leave some questions open at that time, so make sure you're on my Instagram and Twitter. Links are in the video description. I'll post a comment just asking for your comments and questions, so make sure you are down there. Guys, I'll see you at the next video. Thanks once again. Until then, have more fun to get more done. Peace out.